Welcome back to Indianomics. I've been speaking with one of the most veteran policymakers and watchers of the Indian economic scene, Mr. Montek Ahluwalia. Mr. Ahluwalia, demonetisation, well, it is unprecedented, a short form for currency swap, 85% of the currency changed. How do you think this is going to impact? Is it going to mean more people will pay taxes, more people's audit trail is already with the government, or is it going to have some serious negative consequences? What's your sense about the next 12 months?
Well, it's very difficult to predict about the next 12 months, but let me say that, demonetization by itself, there's no question it was a major shock to the system. I mean, after all, if you take away 96% by value, or 86% by value of the total currency, then it's going to be a shock in the sense that liquidity is going to be strained. And the issue there is how big was the shock, and frankly, I have not seen from the RBI, or for that matter from the government, a clear quantification of that.
Well, the RBI did say 15 basis points of this year's GDP will be taken away. That was what they said in the December 7th monetary policy press conference.
I must go back and look at that estimate. Was that sort of a specific computation about the disruptive effect of the demonetization, or was it simply that the growth rate is going to be lowered by that much? I don't fully remember. But whatever it is, the basis for making that statement should have been made a lot clearer. And secondly, to say that at the beginning of December, before the extent of the shock is actually realized, I mean, there is need to review that. It's quite possible that the economic survey, which is about to be presented to Parliament, maybe they're holding back and they'll say all that in the economic survey. So we will get a sense. I mean, that's not the RBI, that's the Finance Ministry, but obviously they will be consulting. So maybe the survey will give us a sense. As you know, if you take 15 basis points, in other words, 0.15% of GDP or 1% of GDP at one extreme, at the other extreme you've got, investment firms, investment analysts talking about 3.5 percentage points. My own assessment was that somewhere between 1 and 2 percentage point loss of GDP in the current fiscal year. Now, it's important to know how to measure that. I mean, that means loss compared to what it would have been without demonetization. Now, we don't have, first of all, we don't have an assessment of what it would have been without demonetization. I mean, we know that in the first 6 months, the GDP had come down to about, whatever, 7.1% or so on average. But, that was decelerating. So we don't know, independent of monetization, whether the deceleration would have stopped or continued, and whether that depends on what's happening to private investment. On that, the news at the moment is not all that good. We also were not sure how much that depends on what happens to the recovery of bank credit, which is another big problem area. So I would say that for a sensible quantification, we need to have an assessment that, look, in the absence of demonetization, given the point of the cycle that the economy was on, GDP growth would have been X. Because of demonetization, it was a little lower. How much lower? That's the estimate that people have to make. The second point is that you can't just assume that the impact of the demonetization will end with the current financial year. There will be some spillover, and we don't know again what that is. So we need to see what would be the extent to which next year's growth might be affected by demonetization. Now, some of the things that are holding back growth have nothing to do with demonetization. I mean, for example, if we're not able to fix the NPA problem of the banks, for whatever reason, and if the banks are hesitant to lend, which they have been, that's not going to be resolved by demonetization or remonetization. That needs to be resolved by addressing that problem head on. And there's a second problem, and that is the capitalization of the public sector banks. And we know that given the rise in NPAs, the hole in the balance sheet compared to where it has to be by 2019 or so is much larger than was earlier envisaged. So what exactly are the plans to fill that hole? Are there any plans, or we're not making any plans? So these are issues which I hope the economic survey and or the budget will provide a clear answer on.
Okay.
And based on that answer, people will be able to judge how the Indian economy is going to perform in the course of the next year.
Well, point taken, Mr. Ahluwalia. Much will depend on whether the government looks at these other issues that you are raising in terms of bank recapitalization and other responsibilities. We look forward, of course, to the budget. But take your point on RBI autonomy. One hopes the government is listening. The key takeaways from Mr. Ahluwalia is that at least the board members can be appointed immediately, and the Reserve Bank can be a little more transparent, and that way restore its own autonomy and credibility. That's it on this edition of Indianomics. Thanks for watching.